So welcome to the first in a new series of videos where we talk to you weekly about any news that's affecting you, the small business owner, from a business tax point of view. Hello everybody, it's the middle of January and it's time to talk to you about the biggest changes that have happened in the news this week in terms of business tax. For us accountants, it's quite nice to just spend 5 minutes away from the desk. It's our busiest time of year with the self-assessment deadline coming up, so I'm pleased to be talking to you instead of doing that. So the first bit of news this week that's affecting small business owners is the fact that they've announced that with the budget coming up on the 11th of March this year, which us as tax people get super excited about, we have some news and some rumours that they might be doing away with entrepreneurs relief, which is something that we use quite a lot in the tax game to help reduce people's tax bills when they exit a bill. A lot of the time they exit a business, but often it can be that they're just closing something down, and it really helps get the money that's left out there at a tax rate of 10%. Now, there are some concerns that this is being abused by some of the super rich, as they're known, and as a result, we don't know what those changes are going to be, but it's rumoured to be out there. So if you're looking to do any deals and wrap up any businesses, I think to be sure, we've already seen some changes that are occurring to entrepreneurs relief anyway. It's worth trying to get those deals done before April. So that's something we're not really sure of yet, and it's a rumour, but hey, we want to be on top of those. Interestingly, the other news this week is that we've had a list of publications from HMRC with their top 10 prosecutions, their claim to fame, I guess, with all the cool headline figures that they've saved and cracked down on tax evasion and avoidance. And in this particular case, they managed to get 14 and a half years given to two directors of a set of companies that fraudulently scammed investors out of £60 million. And this was all to do with an HIV research and cure facility they were setting up. It wasn't really an investment and they didn't really spend any of the money on anything qualifying. So as a result, they got a jail sentence. So that's the sort of fun tax bit of news for the week. And the other thing I want to talk about is the fact that as it is January, and I mentioned at the front of the video, we are very, very, very busy. With about 5 days to go at the date of recording this to the end of the tax return deadline, there's still 3 million tax returns to do. That's 17% of the amount of tax returns they're expecting that still haven't been done. So it just goes to show you, we joke a lot in the accounting profession about people leaving it to the last minute, and clients that have been clients for years still chasing them for those last few bits of paperwork, which is why we're all so busy. But they're not alone. 17%, it's quite a lot, isn't it? Now, if you don't know, the reasons why it would be a good idea to do your tax return early is that the tax that is due on that return is also due on the same deadline. So if you've waited to the last minute and then suddenly get a big surprise bill, you might not be able to pay it. I did a video recently on what you can do about that, but generally, you want to make sure you get it done in a good enough time. So just bear that in mind when you come around to doing it, and don't leave it to the last minute. I know HMRC's site's already been falling over this week with a couple of bits and pieces, so just make sure that that's all covered off in good time. So that's it really, 3 really quick bits of news. So if you're thinking of your entrepreneurs relief, just be careful, be mindful that that might be changing if you're looking at your way out of your business, and make sure you've done your tax return well in enough time. And of course, don't scam people out £60 million. We'll see you on the next one.